If you're a real estate agent earning $200,000 a year and you want to grow your passive income, this show is for you. Learn secrets other agents use and hear from experts in our field who will guide you on your journey to investing in assets like apartment communities so you can take your commissions and turn them into cash flow. Here's your host, Randal. Let's dive in.
All right, welcome back, agents. Today's got a special guest. We're bringing on Connor Steinbrook. He is crushing it at eXp, has over 3,400 agents. He's built a massive team in a very short period of time. And it's interesting when you talk about investing, and my background is heavy in investing, fix and flip, and that sort of thing. And I've always likened that strategy to having a product, right? If you're on the investment side of the business, you are creating a product and you are selling that product. And if you are on maybe the brokerage side of the business, you're really in the service-based business where you're reliant on customers to sell a house, right? So you're marketing for different things. And so the risk on an investment strategy is a lot more it's a riskier play is how I always think about it. And talking to Connor made me remember how I've thought through this many times in the past, because and I've talked about it with other guests on the show as well, where I'm like, if you want to go out as an agent and de-risk your investment strategies, all you have to do is start working with investors as an agent who do the type of strategy that you would like to do. And then you learn it from them, right? You know, Connor's taken it to where he has built a massive business that is, it grows exponentially over time by building a business, right? The business of the brokerage. And so we talk about, his unique skills of building a team, how he grew so fast, so quickly, partnering with people, the Wolfpack mentality that he's got. And so it was great conversation for me to have with somebody who is just out there really putting it together. And I love what he's working on and doing. So hopefully you get something out of the show. Again, we talk heavy on the brokerage side of the business, but Connor's also done a ton of investing. I mean, he cut his teeth on investing first, and then he got into the brokerage world subsequent to that. So wealth of knowledge, information. We could have talked for a couple hours, I'm sure. And so again, appreciate the conversation. Anyway, it's if you're getting something out of the show, please go on, rate and review, and give us a comment, give us stars, however you want to do it. Appreciate that. If you have questions or anything, definitely reach out. Podcast at Agents Building Cashflow. Happy to chat with you about anything we discuss on the show at any time. So without further ado, let's bring on Connor, jump into the show. Here we go. All right, Connor, welcome to the show. It's good to have you on. I'm excited for this conversation because, one, I've been following eXp for a while now, and then looking at what you've been working on and building out such a massive team. Just want to talk about how you went from 0 to 3,400, is it now, agents, and what that looks like on a day-to-day basis for you, and just managing that. So a lot of questions around that, but maybe let's start with how did that happen?
Well, first step is you got to make a decision that you want to do it, and you got to go somewhere that you could do it. So you got to go to a company that has large market share, global, saturation around the world, so that you can actually have the ability to have a big enough market share to build a big enough team. So some people are growing like a small local independent. It's gonna be almost impossible to grow a business this size. So the first thing is you need to be at the right place with the right market share and the right comp model to be able to do it. So that's the first one. Then the second is you just have to make the decision to do it. Most people don't make the decisive decision with conviction behind it to be successful, whatever they're doing. They just kind of drift. But it is that first step, is making that decisive decision. This is the path I'm going down. I'm going to figure this out no matter what. I'm going to show up at the outcome I desire no matter what. And I'm going to work at this until that happens. And that's the key to success, is to pick a straight line to the future that you want and not deviate from it. Now, the actual 3 steps to build like a really big business or build a big team, especially in the override model or network marketing or MLM model, is first you have to start your own business. So step 1 is you have to, at least in our business, you have to learn how to recruit. Nobody's going to start your business but you. You're going to have to get it off the ground yourself. So you have to personally learn the art of agent attraction, going out there, learning how to attract agents to your business. Now that you have agents in your business, this is not a recruiting business. It's really a training, leadership, and duplication, leverage, and scaling business. So you're not going to go out and recruit 3,400 agents and manage 3,400 people. Like, that's not how it happens. You need the collective leverage of everybody working together. So step 1, learn how to become a great recruiter. And as you learn how to do this, now you know how to do this. Now you can teach how to do this. So the second step to win is teach agents how to recruit. So learn how to recruit yourself. Now teach them how to do what you just did. Now you start having duplication leverage. So now you start having agents in your team going out there. Let's say you learned how to recruit 10, 20, 30 agents. Now you taught them how to do it. Now you have agents in your team going out there sponsoring agents. Now the third step is the full-on leverage and the systematizing it and for duplication. So first step, learn how to recruit. Second step, teach how to recruit. Third step, teach how to recruit, basically become a leader. So now they're teaching agents how to recruit, and now you're removed from the system. And so that line or that business inside your business is going to go grow on its own. But recruit, teach how to recruit, teach how to recruit. And that's, okay, if you can master those three skill sets, you're going to build a big enough business that you never have to worry about money, and you're going to have a good life.
Yeah, that's awesome. Okay. I'm going to jump into that in 1 second, but you talked about making a decision and then sticking with it. So I know that you were big into investing. You were doing all kinds of different types of transactions, mobile homes, that sort of thing. So how did you get to a point where you were like, okay, I made a decision, and what was the catalyst that got you from the heavy investing side of the business into the brokerage side of the business?
So as you scale your businesses, because when you go into business, you're going to go into multiple of them over time. It's always a relationship between time and money. And so sometimes in the beginning you have no money, but you have all the time. And later you have money, but you have no time. It's vice versa. Sometimes you have none. Sometimes you have a lot of both. But I was trying to figure out how to build a big enough residual income as fast as I could. My goal was $100,000 a month recurring residual income. And I was working towards that. And I had career goals to get there through rental properties and owner finance notes and other residual recurring income streams. Now, the problem with most of them are they're linear models, meaning if I want to buy another rental property, what do I have to do? If I'm going to do like a buy, fix, and refi or a BRRRR strategy, I have to source the deal. So I have to go out there and market for it. Then I have to find the financing to close on it. Then I have to go through the construction to get it, to drive that value up. Then I have to go back and put a tenant in it and then refinance out and repeat it. So if I double my portfolio, let's say I'm making $500 on that rental property, to go to 1,000, I have to do the exact same effort, find a deal, source it, and go through that whole process. Whereas the growth model with an override system, there's leverage to it. So I could bring a partner in, sponsor John Smith on my first year. Now, with John Smith is a great recruiter. So I actually sponsored the #1 recruiter in the world. So I brought the #1 agent to eXp globally. He sponsored over 500 people personally. So that would be the equivalent of a rental property going and buying 500 rental properties for me, if you want to look at it that way. So there's leverage. And so as more agents come into the system, it's like they all have the ability to go out there and build their own business. It would be like as if all your rental properties had the ability to grow legs and arms and walk down the street and start growing their business too. So there's leverage and duplication to it. Now, also, there was big benefits for me to get my license over the years, which I put off for too long. And all sorts of times we're getting like referral deals and low equity leads that come into the office that we can't do anything with. Yeah, just a lot of benefits to doing so. But mainly what happened was I was blowing eXp off for over 2 years. I wasn't licensed, and everybody was harassing me. We all know what it was like when eXp was taking off. Everybody's trying to build a business. There's a lot of greed in the eyes of some, but others really knew what they had and they were doing a good job building it. But I was traveling around the country after saying no for 2 years, and I was speaking at an event in Mississippi. And one of the speakers at the event was the #1 team leader in the overall team size, the largest team at eXp, was speaking at that same event. And I spent 3 days with him, and I couldn't escape. And he showed me he was making over $100,000 a month, and he did it in just over 2 years. And I was like, it's like that Wolf of Wall Street movie where it's like that scene from the diner. They're like, you proved to me you're making $72K a month. Yeah. It's just like that. I was like, Rob, you proved to me you're making 6 figures a month. True net cash flow, no tenants, no termites, no toilets, no back-end management system, none of these extra expenses and risks and liabilities. I'll go get a license and I'll go build this around the world with you. And that's essentially what happened. And so I went and got my license. I joined eXp right as 2018 was starting. And so we're a little over 6 years into this. We now have 3,400 agents. I think we've sold, we're closing up almost 7,000 houses for the year already, I think, to go back and look. But yeah, that's kind of how it all started, is finally getting in proximity to someone that I think I got close enough that I could touch that it was real. And I just was like, I got to do this. I was like, if I don't do this, I'm gonna look back and wonder why I didn't do it. But that's kind of why I ended up going down that direction.
Yeah, no, it's incredible when you put it that way and you think about growing a business in general and how an investment in a business that can grow on its own, and you have teams of people working for you going out, and that's one way of exponentially growing your personal wealth and income. But this is something different. So I briefly looked at it, full disclosure, I'm a broker and I looked at it. One of the guys that you had on your show, Chris Bounds, he was talking to me about it. He's a real estate investor as well, but it just didn't resonate at the time. I was like, oh no, I'm flipping houses. I'm doing this thing, that thing. So how do you compare today, 2024, compared to 2018 when you signed up? Like, it was ripe. It was a new thing. It was a new kid on the block. Yeah. It was, super easy, maybe easier than it is now to go out and sign agents up. But that's just me looking at it from the outside in. So is that true, or is it just as easy today to go out and build a big team?
I mean, truthfully, it's going to be a little bit harder to build a big team now. But the way like these companies work is like in the beginning, you have a bigger market share because not as many people have gone through the company or seen it yet. So the traction ability is easier. So there's two different things that create a net growth in a business like this. You have the front door and the back door, how many come in versus how many leave. So when the company's smaller, it's newer, it's easier to catch attention. There's less, run through rates when people came in and had a bad experience or whatever it is. So you can attract more, but the problem is attrition's higher in the beginning, because in the beginning of businesses, there's growing pains. So there was a lot of issues in the beginning of eXp where they were scaling and system issues and things like that. Now, where we're at now is the company's bigger, so there's a little bit less market share, but the company is just light years better as far as like an actual company. I mean, eXp is actually like a really good company. Now, the joke was in the beginning was all we do is recruit agents, but now we're the number one brokerage in the world independent for transaction count. So we're now number one in the world for transactions, but also for growth the size we're at. So the company's it's a really great company now. In the beginning, not so much, but now so you have less agents that you can probably attract, but your sticking rate in the attrition is lower, if that makes sense. So in the beginning, you can bring more in, but attrition's higher. Now you can probably bring in a little bit less, but you have a better company and you're going to have more long-term partners. But so over the years, they've improved a lot of the systems and continuously added stuff on. But you're never going to get like any company like that initial jump when in the very beginning, but those exponential windows only last for like a year or two. Every company ends up going to like a lower exponential or like even a linear growth. But I tell people, like, if I like sincerely, like I mean, obviously each person is a little bit different, but I truly believe that it's still easier, even like 10 years to come into a company like this and build a recurring income to six figures or multiple six figures than it would be traditionally the way I was doing it, to like a rental portfolio and that type of process. So I think people should be doing both. I think they should be building on the investment side, transactional, house flipping, wholesaling. So they're doing transactional income and then controlling houses and building cash flow. So flip a house, keep a house. That's what I teach them. On sales side, sell a house, add an agent. So transactional income, recurring income. Transactional income, add some stock awards. So selling houses and doing deals keeps the business going forward, life going forward, but wealth is being created through the equity positions and cash flow and recurring incomes on the side. But you should be doing it all. But you can definitely, I mean, we've had people come in and still build businesses quickly. There's a lot of variance on the type of person that they are. So anybody that really wants to take it serious can, but I would say if you're not going to take it serious, you're not going to do it. And that's probably the case with any business. But I mean, so there's a lot to kind of look at there, but that's kind of my take on it.
All right, for sure. Okay, so break it down for me. Again, it's been a long time since I looked at it. I'm just curious. I want to know if, like, again, I'm a broker. I'm like, hey, this sounds great. I want to come over and do this. What is the time frame, or not maybe time frame, but what is the transaction volume? And maybe that's not even the key metric that you guys look at. Is it like, I need this many agents before I start making money on a residual basis, or I need to have 100 transactions a year before I'm making some residual? I don't know what that number looks like, or what those metrics are that you guys are tracking.
Yeah, so we only earn revenue share during an agent's capping window. So we're on an 80-20 split, $16,000 cap. If an agent's doing a full 3% commission, they're going to cap it around $2.66 million as far as the sales volume.
Yeah.
So you only earn revenue sharing during their capping window, because after we cap, we go down to a flat fee shop rate. So if they're selling 100 houses, that's not going to help you as far as your income going up and beyond that, except it's going to be great for them and that person. And they'd be what's called an icon agent or a company. They get their cap back in company stock. But someone selling 100 houses would be a good partner, because they're an attractive individual, successful, and also people want to be around in proximity to that person so that you can help them help attract more agents. But as far as like production, your rev share stops for the year and caps when your partner's cap. So you only earn rev share during the capping window.
Got it.
And then as far as like transaction volume, usually people are capping between like 7 and 12 houses is usually what I see.
Yeah. So yeah, you want you want to go wide with agents doing at least 2.5, and that's where you are making the most, I guess. That's
it can range. Yeah. So, you never like, so a lot of people get out there and tell you, oh, you're going to make this per agent. You can only play with the range. So there's variations. So let's say I had 100 agents and you had 100 agents. What if you had 100 brand new agents that had 100 capping agents? So there's the variance there. Then there's also, we have a 7-tier growth model, and each tier is a holding vehicle in itself. You can look at it as an individual business if you want to look at kind of through those eyes. So if you pull out your back office, you can see how many agents are on each tier at any given time. Now, each tier has a different percentage payout and a different qualification to open up that tier. So you may have 100 agents where you sponsored one, they sponsored one, then you had someone build out the bottom side of your business. Mm-hmm. If you don't have those qualifying paying tiers open, you're not making anything. Yeah. But if you went sponsored like 20 agents, and then those 20 each sponsored a handful, and now you have a big business on your first 2 tiers, you could be making large income. So what I usually see people is they make anywhere from $400 to $1,000 per agent per year from what they started with. So if you started the year with like 100 agents, most of the businesses I see are making $400 to $1,000 per agent per annum, if that helps.
Yeah, that makes sense.
And it can range because of a lot of things. Qualifying for tiers, the price point of the market also helps, because if they're in Canada and the Northeast, like 1 or 2 houses caps them and things like that. Even leases are high in those areas.
Okay. Yeah, that helps. I appreciate that. So one, I want to know, again, how much in the nitty gritty are you on the actual training of the, hey, agents, you need to go out and do X, Y, and Z in order to get more business? Or is it more, hey, you're on the, I'm going to train you how to go get more agents? Which way would you say you're more comfortable?
So I'm more on a, I'm more of a, I'm more of like an entrepreneurship coach. So I train them on how to understand personal excellence in every area of their life. So how to work on their health goals, their financial goals, their relationship goals, their community goals, their faith goals. We focus on building the person first, and the person will go find the skill sets later. So we go into communications, systems, time management, all the traditional stuff. We go into like, how to recruit brokerages, how to recruit individual agents, different types of companies. We're going into like laws of business, law of attraction, vibration, polarity, compensation. I teach them all how these fundamentally work and why these work. I teach them I do a lot of self-esteem and self-image building and help them understand who they are and what they are. But yeah, we cover the whole gamut. We cover social media, paid strategies, organic strategies, proactive and reactive, meaning reaching out to people and placing content to have people reach back out to you. We're going into AI. We go into team building. Most of what I talk on is team building. Now I'm going into, I run a live mastermind call every Monday from 10 to 11. It gets anywhere from 50 to 300 agents on it live every week. These calls are I can't even talk right now. They're archived. So everybody that joins us has access to these calls. There's, I think, over 200 of them now that are between 1 and 3 hour mastermind calls. And these are the actual calls that built the Wolfpack organization live time that were recorded. So while we, did this, we became number 2 in the world last year. So those are the actual calls that the agents learned those skill sets on. So they get access to all the mastermind calls. I run a Wolfpack investing mastermind call. So twice a month, I run a live investing call. And then all those calls are archived into Investment Academy. We're going into creative financing, lease options, different types of lease options, like straight line lease options, sandwich lease options, assignment lease options, creative financing, creating and selling notes. Because about 1 in 4, 1 in 5 agents are also an investor. So if there's, that's upwards of 500,000 agents out there in the market share that we can work with. So we focus on investing. And then we go into a lot of social media. And then we also focus on production, but also the company really provides a lot of great production coaching, because we have what's called an icon agent. This is someone that's doing 20 houses, 20 transactions after they cap each year. So it's like a top 1 or 2% agent. And those are who coach our agents in our company. So you're going to learn from all of our icon agents, and they coach on their specialties. So let's say they're an IG specialist. They're not just going to go coach on like Facebook. They're going to coach you guys specifically on Instagram. And then they're going to find a specific icon agent for Facebook and stuff like that. But so then we run, nightly eXp Explain calls. We have calls throughout the week where you can invite agents to learn more about the model. And then the last thing is I'm actually boots on the ground, like in the game, helmet on, next to my partners. Like I'll be on calls with them. I'm in the calls when we're helping brokerages come over. I'm going back and forth with corporate and the legal teams. I'm direct to the top of the company. A lot of these executives I'm good friends with and have a lot of respect for, and we can do things quickly and get answers quickly. So I help transition teams and brokerages over. I hop on calls with you guys when you're talking to influencers and things like that. But those are all some of the stuff that we'll work with you guys on.
Yeah, man. Okay. So you're a busy guy. So
sometimes.
Yeah. So, all right. I want to break down a few of the things then that you go through with it, with the teams, because, you know, a lot of the listeners, real estate agents looking to invest, trying to figure out where to invest or where to start or how to grow their active income, which is their brokerage side of the business. So what are some of the things that you're seeing across the company with, again, 3,400 agents that some of your reps are doing that is generating the most business right now?
For like investing
agent,
or for
yeah, for growing like listings, buyers, that sort of thing. Just like top producers, what are they working on that seems to be working the most?
Yeah, I mean the biggest producers out there are going to have cracked the code to inbound reactionary social media marketing for sure. Whether it's organic straight through YouTube or IG, or they're using paid ads in some way. But like we had a freshman agent, his name's Suman Kim. He broke Texas state record with us his first year and did $67 million in sales. And the next year it was either, I think it was like 83 million. Don't quote me on it. It's in the 80s or something like that. Yeah. All through YouTube. A lot of the number one recruiter in the company, who's my partner, Mike Sherrard, some of you guys know, he did it all through inbound agent traction. So the reason why that's the number one strategy is because of leverage of time. If you're doing most strategies, they're one-to-one time unit relationships, meaning if I go knock on a door, I'm trading my time one-to-one. Yep. Whereas if I took that 30 minutes and I put it into a 30-minute video and then put that video on the internet, what happens if 100,000 people see it? I have 100,000 time unit relationship to the one unit I put into it. And also what social media does for the clients is one of the biggest conversion struggles people have why their conversion rates are low is the rapport building side when they come to the property. When people are watching you on YouTube over 3, 6, 9, 12 months or following you on social, they're going through that rapport building process already. And so the conversion rate is extremely high for the leads that you work when they come inbound, because when you pick up the call, they're only calling you basically saying, don't mess this up. Like you have to mess it up at that point because they've already vetted you from a long rapport building process behind the scenes. Whereas when you get into a call, let's say you're marketing to a list with direct mail or something like that, every lead comes in is cold. You have to take that, that whole rapport process. So the leverage of time on the backside's higher. And then just you can reach out on a much wider footprint. But that's by far how most are doing it now.
Okay,
so a lot of them do it. Yeah, good.
I just want to ask on that. Can you break down like, here's the strategy that I've seen work, or this is how he did 63 million because he structured his videos where they went out sequentially, or some tactic that somebody else could replicate?
Yeah, just go, y'all type in Suman Kim. So type in Suman Kim, his YouTube channel, and you can just go back and watch. He does property tour videos. So he goes out to the new build pre-construction properties and he films them. But the thing that he does that gets him in front of everybody is speed to lead. While everybody else waits for this kind of subdivision to kind of get up and go, and he's like, let's say a new property comes available. He's out there getting it done first, and he's putting it out there first. So when he puts that address or those keywords on the internet, it's the first thing that the algorithm's going to crawl when someone types that property in. So he's making sure to get out there speed wise to get it out there. But that strategy, a lot of people are using. It's not just Suman. A lot of them have used this new construction, go film the properties and then put those out there. It works better for you guys if you're in a migratory market where people are moving into your market, not away from it. So the reason why Suman's done well is he was from California, moved here to Texas, then he helped out a few of his friends, and then there's a bunch of people moving from California to Texas. So if you guys are in a market where people are moving to, that's a really good strategy. Now, if you're in a market where people are moving away from it, you may have to look at different strategies there, I don't know what to tell you right there, but but like a lot of people,
you move too.
Just wherever everybody's saying they're leaving. But I mean, you can still get a transaction on the way out. You just find someone like Suman in Dallas or wherever, that Florida's another one, or Arizona, and then you just connect people for a referral fee at that moment. And then that person, like Suman in Texas, is going to be like, hey, serve it up for me. I'll go do the deal now.
Yeah.
And you just partner with them. But
Yeah.
that's
Get
the cool thing about being an agent is you can do referral deals, and you can pass leads to people.
Yeah, for sure. Okay. So then let's get that's some of the, I guess the strategy on the social media side. What's another, before we go back, because I want to talk about the recruiting and how you recruit, some of the things that you're working on, but sticking with, I guess, growing that active business and active income as an agent.
A lot of people doing businesses through referrals, traditional marketing strategies, neighborhood canvassing, and, being dominating an area, meaning instead of just doing like 10,000 houses one touch, they're taking 1,000 houses and touch them 10 times, but really canvassing that area once they know a good area. Just all the traditional strategies that people like. The thing is, guys, like if you're hearing stuff out there, people are doing like direct mail, paid ads, pay-per-click, all this type of stuff. Anything works if you learn it and work it enough. So it's just, do you want to do that? So some people will never put themselves on camera, but they'll cold call all day. And then the other person will never cold call a single person or knock on a door, but they'll film videos at home all day. So what you need to do is find out what you would be comfortable doing. And also you need to look at relationship between time and money. So there's time strategies and then there's dollar strategies. A time strategy would be pulling out your MLS and working expired listings and just, reaching out to them. Whereas like a paid strategy, you run paid ads, right? So you need to look at your individual business, where you're at, time and money. And if you guys don't have a lot of money right now, don't feel bad. I didn't do my first deal in real estate till I was $100,000 in debt. You do not need money to do this business. You need goals and work ethic, the belief that you can do it, and never giving up until you figure it out. But you need to figure out your individual position. How much time and money do you have to put towards your business each month? Then look at all these different strategies out there. Watch as many YouTube videos as you can, and we can give you ideas when you come with us. And we teach a lot of these strategies, but it's not more what you're doing. It's, will you do it long enough for where you'll figure it out and will it work for you? Because if you're going to do something that's going to burn you out, you're not going to do it anyways. And if you can't afford to do something with a big enough sample size where you can get real data to see if it's working or not in split testing, then you're not going to know long-term if this is going to work or not. You're going to have too much variance in the short run of your sample size to decide if this makes sense to keep marketing behind it. Yeah. I mean, that's marketing. Yes. 101. Okay. Awesome. All right. Let's dive into then the actual recruiting side. Again, you built a massive business. How long after you joined eXp did you really start to see growth in the number of agents? Was it right away or took some time? How did that grow? Yeah. So like my first year, I think I recruited 40 people, 40. So I personally attracted like 40 or so. Yeah. And at the end of my first year, I was just over 150. So I personally attracted like 40. My business was like 150 or so total across all those tiers. Mm-hmm. And then we got to, I think we just over doubled and got right over 300 the next year. We just over doubled again to 600 the next year. And then we had a really good year that year. That's when, I brought McLeaird on and a couple other great leaders. And also that was the big pandemic kind of explosion when everything took off. We added 1,000 agents that year. I think we went from like 600 to 1,600 in 1 year. And then we went to like 23 or 400. And then last year, I think we went to like low 3,000 and now we're sitting at like 3,400. Yeah. Something like that. Yeah. And so again, when you first started, was there already training in place, I guess, for eXp that you were kind of tapped into, or it was like, I'm going to build this whole thing. I'm creating this. Yeah. So, okay. Yeah. That's what I was kind of curious about again, when I was talking to Chris about it back in the day, but again, I don't know if he signed up with you or who he's with, but, yeah, Chris is with me. Yeah, he is. Okay. Yeah. Cause he was telling me he's like, this massive training program's already built out. You don't have to do anything. Just come on and check it out. Well, we built that. Yeah. So in the beginning, eXp, when I came in, they didn't even have like corporate company slide decks. So, me being entrepreneurial coming in, I think a lot of I'd been building businesses for a while before this. So like, I think I had a good understanding. So I never came in to sell houses. I came in just to build the business. So what I realized was there was no infrastructure. There was no unity. Everybody was running around like a chicken with their head cut off. And so that's kind of when I came up with the idea of the Wolfpack. So what the Wolfpack stands for is, what do Wolfpacks do? They're family. They run together. They win together. They don't take on the world as a lone wolf. So the mentality behind what the Wolfpack is it represents a revenue share organization as a shared compensation line, but we're going to do it together. So that's when I started creating the mastermind calls and all the training academies and the vesting course and all the stuff that I was kind of talking about, our value proposition. And then we branded ourselves. And so what that did was it created an environment to where you had extra value added on top of what eXp was providing. Now there's teams doing this forever. Everybody's built teams, but what a lot of people did differently than what I did was they wanted to charge. So they're all running production teams. They want 25%. I said, I'm going to run this like it's a production team, but I'm going to give out everything as if it was just a revenue share organization, meaning there's no charge for it. So we give out more than what most people provide, even what they're charging for. And then we made it up through the volume. So I said, let's give it out. It's kind of just the same thing with social media, just a jab, 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 right hook approach from Gary Vee. Same thing we all do on social, give out, give out, give out. And then later the outcome comes behind it. But that was kind of the mentality. But I think that's why we grew so much, is because we were giving our partners everything instead of trying to charge from it. And everybody else around us was trying to squeeze an extra nickel out of people.
Yeah. Yeah. It's no, it sounds great. Let's talk about, I guess, the investing calls that you're doing then. Like, what are you seeing right now on the investing side? Is there like a new thing that people are pivoting to and saying, okay, this market is best suited for X?
Yeah. One of the things that's coming back to the investment world that hadn't been around for a long time is buying houses off the MLS. Mm-hmm. I'm literally contracting today a house that's been up there for, it was like 111 or 113 days. It was up there for 260,000. I think it's probably worth 290, 300 as it is. I'm going to have to put a little bit into it, but I'm getting them to come off almost $50,000 to buy this property. And it's one in which all I'm going to do literally is put granite countertops in it and then drywall and paint like a small area of the house, and it's good to go. It's already basically, they put a lot of work into it. It's an estate sale, but there's no way in the world for the past few years, really past like since probably 2012 or 13, could you get someone to come off from a 260K price point down to 210? And this is like a good house. Like, this is not like a structurally compromised like frame house. Like, this is like a nice property that you'll keep in your portfolio for your career. So I think people should be starting more conversations, making lowball offers on properties that have been up there for more than 60 days. We're in this weird stalemate where homeowners that have low interest rates don't want to trade them in because they don't know if they can get a better loan. So they're sitting there. A lot of lenders have shut off a lot of investors. So you're seeing a lot of the freshman investment class, like new wholesalers and people like that, kind of weeded out of the market. And right now, what I would be doing aggressively is raising money, because I've been saying this for years. Like, when the market, when there's deals everywhere, there's money everywhere. But right now, there's no money. So there's deals everywhere, but people can't get the money. So if you have private money right now, you can take these down. So on my Wednesday call yesterday, I did training. So what I'm going to do is I'm going to buy 3 properties. I'm going to pay about $5.25 for these houses. Now I'm going to fund this with my own money. So I'm going to buy 3 houses. I'm going to put anywhere from 90 to 115,000 into these 3 deals is what I figured. So on the low side, probably 90, high side of the range, 115. And then with all my carrying costs, basically I showed that I'm going to be in the between $650,000 and $660,000 into this deal. Now I'm going to be able to go back to the bank. I'm pretty sure when I get it appraised, it's going to be a low $900,000 number. We'll just say 900. So when I did the 80% refi in the example, I think I was going to be able to pull out 720,000. And so I went through and I showed basically how all the numbers worked out. I showed all my carrying costs, utilities, and everything. Basically, I'm going to be pulling out probably a 60 to 70 check after refinancing, have almost $200,000 in equity in this property and cash flowing probably or in these 3 houses, about $1,500 a month. And then I'm going to pull my money back out and I'm going to go do it again. And so instead of doing just like a one burst strategy, I'm doing a multiple. I'll do a multiple at a time. And and then I'll finance them on one loan, package loan, portfolio loan, blanket loan, whatever you want to call them. It's just a loan product that you can finance individual single family properties as one payment across all those. But and then you take that original dollar and you go do it again. So what I was trying to explain to my agents the other day is why some people create wealth and why some don't. So let's look at why most people don't create wealth. Let's say I have $1. Okay, I have $1 in my hand, and then I go to a gas station and there's a candy bar. Well, if I buy that candy bar, what does that mean? My dollar goes from my hand to their hand, but the candy bar comes to me. So I have no dollar, but I have a candy bar. Now, if I eat that candy bar, what do I have? I have nothing. I have no dollar, no candy bar. I'm completely broke. And this is what most people do with their money. As soon as they get it, they spend it on something that doesn't bring value back to them. They don't buy assets. They just waste all their money. Where now, let's say I go the different route. I have that $1. Now, assume this is equivalent to buying a house, but just bear with me, guys, here. So now I take the $1. Let's say I go buy a rental property like I'm talking about here that's at a low value. I'm going to renovate it, drive the value up, and I'm going to pull my money out. So at the beginning, I have my $1. I trade my $1 for a house. Now I have the house. but my dollar's still in that house. Now, when I fix it up and force the equity value up and I go back to the bank and I finance out, I'm going to get my dollar back, but I also have the house. So look at the two scenarios. One creates wealth, one doesn't. One had their dollar and then they ate the candy bar and then they had nothing. One has their dollar still and they have a house. Now I can take that same dollar and go buy a new house, go through that same process and bring my $1 back. Now I have two houses. I can do it again with that dollar. I can keep bringing it back. Now we're talking about more like a couple 100,000 here, but you can raise that money through private money lenders, credit lines, home equity lines of credit. But essentially what I'm pointing out is you can use your same money to cycle it and out and build a portfolio with it. And so you start out with one house, and then as you build your net worth up, now you can do two houses at a time. Now you can do three, or you can go into apartments. But really that's the way that you guys can create wealth. And then also while you're doing this, you're getting the tax write-off from your production business or you're flipping, whatever you're doing, you're going to get by acquiring this cash flow real estate, you're going to get, bonus depreciation and then your write-offs. And so if you can buy enough real estate each year, you can wipe out a 7-figure tax burden where you don't even have to pay taxes, honestly.
Yeah.
If you keep buying property.
For sure. So are you focusing mainly on the BRRRR, that strategy? And because I know you've done notes and you've done a lot of stuff in the past. So why BRRRR strategy now?
Right now, because it's, part of my career, guys, I was massively in debt. So just know you can get to where I'm at right now. But where I'm at right now is, well over a decade later, I've cracked the code of the business and now I've got cash. And I've been saving cash waiting for this moment because I can go and strike. So this deal that probably make me $250,000, if you run the math on it, if you had to use a hard money lender, that's going to chop out probably $70,000 to $90,000 of that deal if you carried it on those three properties to the refinancing window. So you can still do the deal with a hard money lender, but think about your profit goes down. So say you're now making 90,000 less than 250. People are like, well, that's still good. What is that, 160?
Yeah.
Don't get me wrong, math. But
no, you're good.
But what if you can't get to that 160 because somebody else can underbid you? Because if I have, say, $90,000 spread and I'm using my own cash, I can actually pay 45 grand more than you, but also still make 45 grand more than you. So this is how a lot of you guys are getting beat out by investors, is they're not leveraging their money. They're using their own money, but they have limitations with their own money because the time value of money, and they don't have endless amounts of money. So let's say, I'm basically going to take almost $700,000 of mine, put it into this deal, tie it up for 6 months, and then pull it back out. But while that money is tied up, I can't use it at that moment. But I can strike right now. Why I'm doing it this way is because I can strike really quick with not having to get hard money loans. Like this property right here, I made a decision just like that on. And I tell them, like, as soon as your title company gives me clear title, I'll close. So I can go quick and I can strike fast. So you guys can find people that will partner with you raising private money. A lot of lenders out there will give you 8% if you look hard enough at no points, or 10% with no points. But it's not that like I'm opposed to doing other strategies. This is just the fast. So where I'm at right now is I'm trying to acquire as much debt as I can, essentially, that's leveraged correctly. I'm not so concerned about the cash flow on the property because I got cash flow coming from other businesses. I'm more concerned about getting the property controlled for an equity play. So even if the property, I pull my money out and let's say I'm only making like flat, I'm breaking even, but I can control, a few $1 million worth of real estate. What happens over time is you'll season into the performance of the property. You're going to have the market going up, hopefully, principal being paid down by the tenant, and then rent rates have historically gone up in time. You guys can track how your rent rates are going up. So let's say you have a property that's negative $100 cash flow today, but you financed out all your money and you have the money to carry that $100 a month payment. Well, then let's say in 5 years, you may be making $500 a month cash flow. So if you can carry the properties and control it, I'm a big believer in just get the asset. Now, most people are trying to build their portfolio to create cash flow. So it really is depending on your position. But if you have enough money to cover maintenance, and let's say you're barely making any cash flow, just controlling those properties, if they're strong performing properties in good areas, and also this area I'm buying in has been a growing market. They've gone from 10,000 to 25,000, almost to 30,000 people, and they're growing quick. So I'm not just stupidly doing this. I'm forecasting and watching like real performance data that it's going to season into a better deal. If that makes sense, how I'm trying to explain that.
Yeah. No, for sure. I mean, we talked a minute ago, you said you were investing some as an LP in some apartment deals and that sort of thing. And so I'll liken it to what I have seen on the apartment side. It's 21, 22, everybody's selling on pro forma. And like that has gone mostly away from what I've seen lately. Now people are actually like, oh, well, we should probably actually pay for the actuals and like see
Yeah.
what's actually happening at the property. And so, I mean, you're kind of still, you're buying it deep enough to where it doesn't matter on the single family side. Like you're buying in the money and you're going to be in the money on the refi. So it's not the exact same, but even if you are net, negative 100 per month cash flow, whatever, then it's still in the long term. Yes, you're looking at the whole deal as a whole. And what I'm getting is that one, you need part cash, or you are looking for assets that are going to offset some of your other income as well.
Correct.
And you have the capital to go after those deals. So yeah.
So that's where
Good
you
play,
guys
good
really
strategy.
think. I'm sorry to cut you off there. Like, so like I
Okay.
can I could finance out of this deal on a 15, 20, or 30-year loan.
Yeah.
And so technically I could go down to a 15-year loan. I may be negative cash flow on 3 properties, like $1,000 a month. But if I'm pulling out almost $70,000 refi check, what's $1,000 a month? That's $12,000 a year. That's going to cover that for 5, 6 years.
Yeah.
And do you guys not think that the rent rates are going to go up enough to cover that? And so it really depends on what your goal is. So if your goal is to try to create cash flow, you want to finance it on a 30-year note. So you're going to have cash flow today. But if you've got your other businesses, let's say you're bringing in 20, 40, 50K or more a month from something else, like you don't need to. So you always just need to look at, that's why it's specific for that individual. Now, the reason why I invest in apartments like that is it's a quick dump into at the end of the year. So let's say it's not, let's say I'm coming into like 3 weeks left for the year and I got a couple $100,000 sitting there. I may not be able to find a house that makes sense in those last few weeks, but I can stuff it into an apartment deal if it's going to drop my tax burden down and it makes sense to do the deal. Now, I wouldn't just do it just for the taxes. That's how sometimes people overlook and get in a bad deal trying to do that. But if it makes sense tax-wise and the returns are sound and you got a good GP team, you can get it in there quickly at the end of the year, put that way, where it's not trying to source an actual house to buy during the holiday window at Christmas when everybody's like, you're not going to get a house at that point. So it's, and it just diversifies a little bit. So I have some of my money in apartments, some of it in single families, some in stock market, some in crypto. And so I kind of just spread it around. But most of my money going forward is going to be in single family rentals or apartments.
Okay. Yeah. If you are, I know you just touched on this, at the end of the year and you are looking to dump some money into an apartment deal, make sure you start in like November, September, something like that, vetting the sponsor, talking about deals, because you don't want to just throw money into a deal just to throw some money into a deal. Just a word of caution, I guess. But if you have those relationships,
because I have rushed money into a deal and it did not work out. So some good advice.
Yeah. Awesome. Well, hey, Connor, man, I appreciate you jumping on. I could ask you a ton of questions, I know, but we're at the top of the hour, and what you've done, what you've built is awesome. It's great to see. And maybe I can talk to you offline a little bit more about eXp and what's going on, because when things tightened up over COVID, it was evident to me as a real estate investor that having a source of income that was not reliant on just necessarily marketing dollars or the effort of a single type of investment strategy became evident. And again, growing a business and having a group of agents who are helping you produce and helping, I guess, pay your living expenses, that sort of thing, it was very appealing. And so, we've looked at starting and increasing the brokerage side of the business and building that sort of thing up. And so it's one of those things, like you kind of mentioned how you exploded during that time because people getting away from like a product-based business, which is investing. You're selling a product, you're getting a house at the end of the day, you're going to rent it out, whatever. You're in the product-based business, to a service-based business where people come to you when they need something, and it's just income from other people's activities. Is very appealing. So anyway, again, I just wanted to touch on that just briefly. But
all you guys watching, you got to push them to join, and then you guys can join with them, and we
let's go.
But so we can go into there's a lot of other benefits just outside the comp model. For example, we're selling a large 5-figure amount of houses each year. If you ran the business, what does that do? It creates big liability, expense for accounting. So like literally last year we sold well over 10,000 houses. I didn't see any pieces of paperwork. I didn't have to review any contracts. I carried no risk and liability. I had no CPA bill. I got a 1099 given to me at the end of the year. And so really what eXp is they do all the stuff that we don't want to do as business owners: accounting, fundamental, all the back office management stuff. And then they let us focus on the fun stuff: recruiting agents, training of partners, doing transactions. And so they're kind of, I look at them as just like the partnership, as like the facilitation side of the business that I don't have to deal with. But I had a broker that he had 130 agents came in with us. He got sued and had $187,000. He took it on the chin, and he was like, "I'm done." And that's why they moved their brokerage over, is the liability side. But yeah, if you guys want to have that conversation, just let me know. And there's always room in the pack.
Yeah, nice. Awesome, Connor, man. Appreciate it. Thanks for jumping on. Catch you guys on the next episode. Did you know that 80% of the agents we speak with got into real estate in order to gain passive income so they could obtain financial freedom and become work optional? If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. We'll catch you on the next episode.